Let me explain. So basically what Nate's talking about is that when you do bring a bunch of people together into a project and they're investing passively, okay, passively means they have no control over the day-to-day actions. They're going to supply capital and then someone else is going to do all the work. You're technically creating an equity. You're creating a stock, but it's an untraded stock, right? It's something where the general public can't look at the performance of the stock. It's a private stock that someone else is controlling. So to prevent developers from taking advantage of people that may not be sophisticated kind of investors, that may not be smart, they place like income thresholds that you have to have. So if you're going to invest in an opportunity like this, you have to have a certain amount of net wealth. Mostly what the SEC wants to know is that any money that you're investing into something like this, that you have the ability to lose it. Because these are high risk in the sense that there is no, there is no necessarily transparency. Even what Nate's talking about, the private equity people that he's dealing with want to see audited financials on a quarterly basis, which is, an extremely quick pace to have that.
I think it's annual.
Is it annual?
But it's still just a lot of quarterly.
Oh, you say? I was like, man, that's crazy. It's like that's all those strings in your back that they're pulling, right? So those kinds of opportunities exist if you are an experienced investor, if you've got a certain amount of high net wealth, which includes equity that you own in positions. This is a way to where you can get involved in some of these kinds of projects without having to take on the risk of being a developer.